Today's video is all about crafting your very own 5-year investment plan. Because let's face it, who doesn't want to build assets like a boss? We're diving deep into the world of smart investing, breaking down everything from setting goals to tax-efficient strategies. So buckle up and get ready to turbocharge your financial future. Before we start, please subscribe to get more valuable content like this. Ever wonder how to make your money work smarter, not harder? Well, you're in the right place. We'll be spilling the beans on asset allocation, diversification, and long-term wealth building. But hey, don't just take my word for it. Stick around and see for yourself. So grab a pen, grab some popcorn, and let's embark on this epic journey to financial freedom together. And hey, while you're at it, don't forget to hit that subscribe button and join our community of savvy investors. Trust me, you won't want to miss out on the valuable insights coming your way. Ready to level up your financial game? Let's dive in. All right. Let's talk about some financial goals. Picture this. You're sitting down with a blank slate, ready to map out the next 5 years of your life. It's like planning a road trip. You need a destination in mind before you hit the road. So what exactly are financial goals? Well, they're like checkpoints along your journey to financial success. Whether it's saving up for a dream vacation, buying your first home, or socking away money for retirement, these goals give you something to aim for. Now here's the thing. Not all goals are created equal. Some might be short-term, like saving up for a new car, while others are more long-term, like building a nest egg for your golden years. It's like planting seeds in a garden, and you have to nurture them over time to see them grow. The key is to make your goals smart, specific, measurable, achievable, relevant, and time-bound. That way, you have a clear roadmap to follow and can track your progress along the way. Now, let's talk about something super important, understanding risk tolerance and time horizon. Now, I know these sound like fancy finance terms, but stick with me. I'll break it down for you. So, risk tolerance is basically how comfy you are with the ideas of taking chances when it comes to your money. Think of it like deciding whether you're up for a thrilling roller coaster ride or if you'd rather chill with a cozy book at home. It's all about knowing yourself and what makes you feel secure. Now, let's chat about time horizon. This one's a bit easier. It's just how long you're planning to keep your money invested. Are you in it for the long haul, like saving for retirement way down the road? Or maybe you've got a shorter time frame, like saving up for a dream vacation next year. Knowing your time horizon helps you pick the right investments that match your goals. So, there you have it. Risk tolerance and time horizon decoded. Just remember, it's all about finding that sweet spot where you feel comfortable and confident with your money decisions. All right, folks, let's talk about how to spread your money around like peanut butter on toast, but in a much smarter way. We're diving into asset allocation, which is basically how you divvy up your investment pie to make sure you're not putting all your eggs in one basket. Picture this. You've got a basket full of different fruits, apples, oranges, bananas, you name it. Now, if you only pick one type of fruit, you're missing out on all the other flavors. Asset allocation works the same way. You've got your stocks, bonds, real estate, and maybe even a little cash tucked away. The key is finding the right mix that suits your taste buds, or in this case, your financial goals and risk tolerance. Now here's the kicker. By spreading your investments across different asset classes, you're lowering your risk while still aiming for those juicy returns. It's like having a balanced diet for your portfolio. So whether you're a risk taker or prefer to play it safe, asset allocation is your ticket to a well-rounded investment strategy. Now let's talk about where you can park your hard-earned cash to make it work for you. Think of it like choosing the right tools for the job. You want options that fit your goals and comfort level. First up, we've got stocks. These are like owning a tiny bit of a company. They can offer big rewards, but come with a side of risk, like a roller coaster ride for your wallet. Next, let's chat about bonds. These are like loaning money to governments or companies. They're more stable, but can be less exciting than stocks. It's like playing it safe with a reliable old friend. Mutual funds are another option. They're like a basket of investments managed by pros. You get instant diversification without all the legwork. It's like having a team of financial wizards working for you. Now, let's not forget about exchange-traded funds, ETFs. These are similar to mutual funds but trade on the stock exchange. They offer flexibility and diversity in one neat package. It's like having a buffet of investments at your fingertips. And last but not least, We've got real estate and alternative investments. These can include things like rental properties or precious metals. They add a dash of variety to your portfolio, like adding different spices to a recipe for success. Remember, each option has its pros and cons, so do your homework and choose wisely. With the right mix, you'll be on your way to financial success in no time. Alright, now let's dive into the art of creating a diversified portfolio. Sounds fancy, right? But don't worry, we'll break it down into bite-sized pieces. Picture this. You're like a savvy chef cooking up a storm in the kitchen. Instead of just one dish, you've got a whole menu of investments to choose from. We're talking stocks, bonds, real estate, you name it. The trick is to mix and match these ingredients to create a well-balanced meal for your money. Now, why is diversification so important? Well, think of it like this. You wouldn't put all your eggs in one basket, would you? By spreading your investments across different assets, you're reducing your risk. If one investment goes south, you still got others to fall back on. But here's the thing. Diversification isn't just about spreading your money thin. It's about finding the right balance that suits your appetite for risk. Maybe you're a thrill seeker who loves the excitement of the stock market. Or perhaps you prefer the stability of bonds. Whatever your flavor, the key is to create a portfolio that's as unique as you are. So roll up your sleeves and get ready to mix, match, and mingle your investments. With a diversified portfolio in hand, you'll be ready to weather whatever the market throws your way. Now let's tackle the dreaded T word, taxes. But hey, don't let it scare you off just yet. We're here to make tax talk as painless as possible. Promise. Picture this. You're on a treasure hunt, and every dollar you earn is a shiny coin waiting to be discovered. Now, Uncle Sam wants a piece of that treasure. But fear not. We've got a few tricks up our sleeves to keep more of that gold in your chest. So what's the secret sauce? Tax-efficient investing, my friends. It's like navigating through a maze. You want to find the path that leads to the least amount of tax trouble. That means strategically using retirement accounts like 401ks and IRAs to shield your treasure from the taxman's grasp. But wait, there's more. We're talking about minimizing those pesky capital gains taxes and maximizing your tax deductions. It's like finding hidden gems in a sea of tax code jargon. Now, I know tax talk can be a snooze fest, but trust me, it's worth paying attention to. By incorporating tax-efficient strategies into your investment plan, you can keep more of your hard-earned money and watch your wealth grow over time. So let's raise a toast to tax-smart investing. Alright folks, let's talk about keeping an eye on things and making tweaks when needed. Think of your investment plan like a garden. It needs regular watering and pruning to flourish. So how do you know when it's time to grab the watering can or break out the pruning shears? Well, it's all about staying in tune with your goals and keeping an ear to the ground. Life is full of surprises, and your financial goals may shift over time. Maybe you land that dream job or decide to start a family. These changes can impact your investment strategy. Now, when it comes to monitoring your plan, think of it as checking the weather forecast before heading out for a hike. You want to stay ahead of any storms that may come your way. Keep an eye on your progress, and if you notice any deviations from your plan, don't panic. It's all part of the journey. And remember, flexibility is key. Just like adjusting your sails to catch the wind, be prepared to make changes to your plan as needed. Whether it's reallocating assets or reassessing your risk tolerance, staying nimble can help you weather any financial storms that come your way. Now let's dive into the long game, building wealth for the future. Imagine this. You're not just saving for tomorrow, but for years to come. It's like planting seeds in a garden and watching them grow into a flourishing oasis. It isn't about quick fixes or overnight success. It's about laying down roots that will support you for years to come. So what's the secret sauce? It's all about consistency and commitment. Think of it like a marathon, not a sprint. You're in it for the long haul, pacing yourself and staying focused on the finish line. Sure, there may be bumps along the way, but with determination and perseverance, you'll weather the storms and come out stronger on the other side. Now here's the thing. Patience pays off. Rome wasn't built in a day, and neither is your financial empire. It's about making smart choices today that will pay dividends tomorrow. So keep your eye on the prize and stay true to your goals. Before you know it, you'll be reaping the rewards of your hard work and smart investing decisions. And that's a wrap, guys. Remember, this journey to financial success is like a marathon, not a sprint. Keep setting those goals, stay disciplined, and always be ready to adapt. And before you go, don't forget to hit that subscribe button for more tips and tricks on smart investing. And hey, just a friendly reminder, while we've covered a lot today, remember to do your own research before making any big moves. Happy investing, everyone!